Hey everybody, Boris Glassberg from BK Forex. Welcome to our daily Forex technicals for 4-2-13. Dollar yen. Are we going to go to 92 next? Quite a possibility. As always, past performance not indicative of future results. Trading Forex carries high level risk may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you can sustain a loss of some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. The information, including commentary and trade ideas provided on bkforex.com, should not be relied upon as a substitute for extensive independent research, which should be performed before making investment decisions. BK Forex LLC and Com are merely providing this information for your general information. The information and opinions presented do not take into account any particular individual investment objectives, financial situation, or needs, and all investors should obtain advice based upon their unique situation before making an investment decision, and should tailor the trade, their size, and leverage according to their own personal risk appetite. We're not responsible for any loss in current investment made by readers and clients as a result of this information contained here. It would not render investment, legal, tax, or professional advice if such advice is needed. Please seek services of a competent professional before you trade. Well, I think the story of the day today still continues to be dollar yen. If we're back finally from the thin liquidity markets at a holiday. Today's the first full day that everybody is on board. And the key thing I think that you can see here is we talked about this continuously. Let me just actually go into more level. We talked about the idea that 93.50 was a key support level. Yesterday, key support level was given. As you can see, we took out 93s, and we actually went all the way down to 92.50s before we caught a bid here. Now, I think this is an interesting hold here because it's 92.50, obviously finding a bid earlier in the session here in Asia, and it may very well hold as the near-term temporary support. But it's very similar like we had with 93.50, where we caught a bid, several days of consolidation for the downside. We may have the same pattern playing out because the really strong bid here is this 91.50. This was from the actually, to be more accurate, 91.50, 9100. This was from that big distribution that we had several at the beginning of at the end of February, when we had a big correction in the yen pairs. And we may be really inching our way towards this double bottom test here in 9100. For now, however, the operative level is 92.50 on the downside. That gets broken, I think it clearly opens up possibility for 92, and we just continue to keep drifting lower. Bottom line is that yen, despite the fact that everybody thinks it's a buy, dollar yen thinks it's a buy, it looks like it continues to be drifting lower, even though we've already had the end of fiscal year and capital flows and everything else has already passed us. We still continue to be drifting lower. Of course, we have the BOJ meeting, and that's going to be a very, very interesting event risk. One of the interesting things here is that I think if we don't get any kind of a meaningful dramatic gesture out of here, that's when you can get a much stronger move towards the downside, towards the double bottom test. If we do, this could all turn around very quickly. To the upside, dollar yen really needs to take out 94.50 at very minimum, ideally 95, to reestablish its bullish tone and puts us back towards the 96, the highs of the session here. For now, though, bias definitely to the downside, and 92.50 now is the next operative level to test for the shorts as the trade comes in. So that's dollar yen, very much still on the scale as a trade. Euro dollar is having, let's go back to 4-hour chart because you can really see this much better here on the 4-hour chart. Euro dollar is had the big spurt yesterday in halfway thin markets, went to 28.75, but having a turn back down here. We are clearly capped at this level here. A little bit of negative news out of Spain, definitely hurting us. But here's the interesting thing, I think, the fact that we could make 29s so far, pretty bearish sign for the euro. That means we pretty much, this was a short covering rally. We come back to the 28.50s. We may be pushing ourselves right back down towards the 2800s on a retest. The key level here, need to take out 28.80, 28.85. That definitely puts us in scope for 29, and then of course a push through 29.50 as a more stronger recovery. But so far, that whole level has been rejected. The bias in early Europe is to the downside. The fact that we broke 28.50, couldn't hold it, a little bit negative here, and the trade does not become positive, I think, in my opinion, that is to the upside, until you break 28.85. Then you have a reasonable run towards the 2900s and into that 2900, 2950 trade as we go further. To the downside, there is support here at 2800, so we could be going right back down. I don't know how much downside there is here for right now. Of course, if we have much stronger downside action, where that is we start breaking here, start breaking 2800s, and then come back to a much stronger, to a true test of 2750. That would be a very, very negative construct on the euro dollar. Right now, it's indeterminate. Still a little bit of an upside bias if you can take out the highs. If we start drifting towards the 2800s, it could just be another consolidative session here in euro dollar that doesn't really bring a lot of interesting trade. Aussie, a surprisingly strongly bid here. But we're starting to turn back again off that strong bid. The 105 level, I have been talking about the fact that it's definitely operating as a pretty stiff resistance level in the Aussie dollar. And today, you saw a run back through. We tested 104s yesterday. You saw a run back through the 104.50s, but now again starting to stall, and it's very, very indicative of consolidation. The interesting thing here, I think, here is if we start to unwind a little bit lower here, what we would have done if you go on a longer term time scale here. Let me just see if I can pull this out, and that is lower highs on the Aussie. If we do start to drift lower here, that is a failure at a lower high, that would suggest that the next break of the 104s could be more terminal to the downside. We could probably drift all the way down to 103.50, which is the really stronger support in the Aussie. In the meantime, for the upside, really hard to trade the upside here unless you get uber bullish and a break of the 105s. Now, a break of the 105s does take you to fresh highs, puts the Aussie in a much better structure. It really opens up the possibility here of 105.50 all the way 106s. On the dailies, you don't have too much resistance here once you take out the 105s. As you can see here, once you take out the 105, you don't have much resistance. But for now, it looks like it's just a failure at a lower high, and super, super aggressive if you're sort of fronting turns and you like to make bets on turns. It's not a bad risk reward ratio here against the 105s to try to see if we drift a little bit lower in the Aussie. Lastly, cable also holding its own. Cable, the operative level we're talking about here was the 5250. Has not, we tested this in Asia just a little bit today, but hasn't broken through. I think the key session is going to be North America today. If we can, for North America, we gather steam, we take out 5250, we have a very reasonable chance of going to 5300 because cable clearly looking a little healthier. We have event risk on the calendar today. We have PMI. That could push us one way or the other, of course. And if we do have a negative resolution to that, then we come right back down to the 5150 support level in the pound. So that's kind of how things are shaping up. Yen is the clearest trade right now in terms of its price structure. Euro is very much in a range position, and Aussie could possibly be peaking a little bit here. With those who are super aggressive may want to try to take a short against the 105 position. And that's pretty much how the numbers are shaping up right now. As always, we'll see you at bkforex.com. Wishing you the best of luck. Boris Schlossberg over and out.